Imagine waking up tomorrow to headlines like, China invades Taiwan, stock markets plummet, oil prices spike, your 401k wiped out in hours. But that's just the beginning. Because if Taiwan is invaded, the global economy could unravel in ways we're not prepared for. Part 1. Why Taiwan matters. Taiwan is more than just a geopolitical hotspot. It's the beating heart of the global tech supply chain. Over 90% of the world's advanced semiconductors are made in Taiwan, mostly by a single company, TSMC, the Taiwan Semiconductor Manufacturing Company. These chips power everything: iPhones, electric vehicles, AI data centers, military satellites. If Taiwan goes dark, so does the modern world. And this isn't hypothetical. China has made its position clear. Taiwan is part of its territory. The U.S. has issued vague promises of defense. Meanwhile, military exercises in the Taiwan Strait are becoming more frequent and more aggressive. Part 2. What an invasion could look like. If an invasion happened, it likely wouldn't start with tanks on a beach. It might begin with a naval blockade, cyber attacks, or missile strikes on key infrastructure. That would immediately paralyze exports from Taiwan. No chips, no parts, no communication systems. Supply chains would seize up overnight. Think back to the 2020 chip shortage. Car prices surged. Phone launches were delayed. Now multiply that disruption by 100. Part 3. Global market impact in the first 72 hours of an invasion. The S&P 500 could fall 10 to 20%, similar to the 2008 financial crisis. Tech stocks like Apple, Nvidia, and AMD could be hit hardest due to their reliance on TSMC. The price of oil could skyrocket if tensions spread across the South China Sea, a vital shipping route. Safe haven assets like gold and the U.S. dollar would surge. Meanwhile, insurance companies, exporters, and Asian equity markets would enter freefall. But it wouldn't stop there. Part 4. The real economic domino effect. The real damage would play out over weeks and months. Global manufacturing would grind to a halt. No semiconductors equals no new electronics. Inflation would surge as companies scramble for scarce resources. Central banks like the Fed would face a nightmare. High inflation with collapsing growth, a recipe for stagflation. U.S. China trade could collapse entirely. With over $600 billion in annual trade, this would hit both economies hard. And it would force a rewiring of the global economy. Supply chains would shift. Nations would rush to friendshore or reshore manufacturing. But that takes years. Part 5. A militarized economy emerges. The longer the conflict drags on, the more we see a militarized economy take shape. Governments would ramp up defense spending. Companies would face new export controls and sanctions. Chinese firms might be cut off from Western technology, similar to what happened with Russia. And this isn't just economic. Global trust in financial systems would erode. If countries see reserves frozen or trade weaponized, they may pivot away from the U.S. dollar. The dollar's dominance could be tested, especially if BRICS nations see an opening. Part 6. Who stands to gain? It's not all downside. Some industries might boom. Defense contractors like Lockheed Martin or Raytheon. Domestic chip makers in the U.S., South Korea, and Europe. Raw materials suppliers like rare earth miners. Countries like India or Vietnam might benefit from companies relocating supply chains, but make no mistake, the short-term pain would be severe, global, and possibly historic. Final thoughts. An invasion of Taiwan wouldn't just be a regional conflict. It would be an economic 9/11, a trigger event that redefines how the global economy works. Are we ready? Right now, global markets are treating Taiwan as business as usual. But history has a way of punishing complacency. If you've made it this far, please like and subscribe to the channel. This is Finance Related 101, where we break down the stories behind the headlines and the economics shaping our future.